considering all emerging market currencies and all emerging market economies currently are going through a patch of adjustment. What do you think this effect of emerging market slide will have an impact on portfolio investments in India?
Clearly, it's a tricky situation where one part of India is witnessing dramatic correction. Rupee is down about more than 4% in the month of August alone. 10-year interest rate is up about 33 basis points in the month of August alone. On the other hand, equity market, at least in index term, is near all-time high. So clearly, if we see from an FII point of view, they will be in two minds. One, should they look at the improving micro situations in India, as is evident from the quarterly results, or should they worry about deteriorating macro situation where oil prices are higher, rupee has weakened, interest rates have risen, which ultimately could have impact on growth. So it's a tricky situation where FIIs, I hope and pray, will take a call on a longer term basis, looking at the fundamentals of companies in which they are investing rather than taking a top-down view.
India, a lot is happening about SEBI in terms of the FPI money from NRI, etc. What do you think is the impact of this, and is this such a big issue? You know, there are all kind of numbers floating around, $75 billion, $80 billion.
Undoubtedly, if the FIIs believe that their investments in India is not welcomed, clearly they will take a different view. But the good part is that SEBI has clearly communicated that they are keeping in mind concerns raised by the FIIs. The anyway deadline is all the way up to 31st December, so there is no pressing hurry to do it tomorrow. And this is an issue which can easily be resolved through consultation, because on one side FIIs have clearly said that they have no problem with the disclosure, and on the other side SEBI has also mentioned that they are not in favor of restricting someone's ability to do a business. All they are interested in ensuring that there is no round tripping. So the objective is the same. How one arrives at a way to achieve that objective should be easily approachable.
Right. Nilesh, so do you think India will be isolated or different in such a market as earnings growth are showing the first signs of decent improvement, or do you think we're not that decoupled at all?
My optimism is that yes, we will be in a better off position compared to 2013 to withstand a global shock. In 2013, taper tantrums created a shock, but at that point of time, macro India was fragile. Inflation was in double digit, current account deficit was upwards of 4.5%, fiscal deficit was almost higher than current account deficit. Clearly, that was the time when India was also going into elections after a year. So put all these things together, we were in a far weaker situation. Today, inflation is rising, but it's rising from lower single digit to higher mid single digit. Fiscal deficit is likely to overshoot the budgeted number, but it's on a much lower base. Current account deficit is rising with higher oil prices, but it is still way below what it was in 2013. So we have a slightly deteriorating macro situation in current account deficit, fiscal deficit, inflation, but it is significantly superior to what it was in 2013. More importantly, between 2013 to 2018, we have taken certain steps which will create a good platform for economic growth in the future. GST has been introduced and rolled out. It has made India one nation, one market. The demonetization benefits are now visible with higher digital payments and better tax compliance. The government has also built infrastructures in terms of road, railway, solar capacity, and so on and so forth. put all these things together, today we are far better than 2013 mid. Second, the corporate India is looking at the future far more positively than they were in 2013. So put all these things together, despite higher oil prices, despite higher real interest rates, despite weakening rupee, I think we have a reason to be optimistic about corporate earnings growth in the rest of the financial year.